Most traders miss gold's biggest moves because they don't understand what's truly driving the market right now. But a single, precise call can change everything, like my August 22nd forecast at 33.22, now over 7,000 pips in profit. Gold has just broken above 4,000, where institutional money is quietly positioning for the next big move. What happens next could decide if we surge toward 4,500 or collapse into a sharp correction. Macro outlook: 3 key forces driving gold. Let's break down these forces one by one. First force: geopolitical and fiscal risks. Government shutdown in Washington, mounting pressure on the dollar, and a powerful boost for gold. Tensions between the U.S. and Venezuela continue to escalate as the U.S. deploys F-35B fighter jets and various military assets, citing the objective of eliminating drug trafficking groups. Russian-Ukraine peace talks show some progress, but no deal yet. Until a concrete agreement is reached, uncertainty will keep gold supported as a safe haven. That's just the first force, but the second one is even bigger: the U.S. dollar. Second, the U.S. dollar dynamics. The dollar remains the most important counterforce to gold. Let's follow its story step by step. DXY technical analysis. Starting with the daily chart, after 50 trading sessions, the US dollar index DXY has finally closed above its long-term downtrend line and the consolidation zone near 98.4, exactly as we projected earlier this week. The next upside targets are 99 and 99.8. A confirmed break above 99.8 would complete a double bottom reversal pattern, potentially launching a new bullish cycle toward 101.5 and 104.5. Let's see how price action unfolds over the next few days to confirm the scenario. Moving down to the H4 chart, the short-term structure provides even more clarity. Following a failed breakdown pin bar near the previous low and the monthly uptrend line, DXY has started forming a series of higher lows, putting increasing pressure on the bears. From an Elliott wave perspective, this could mark the beginning of Wave 5 in DXY's bullish sequence. A brief retest of the horizontal support that was previously broken could provide the momentum needed for a rally toward 99 and 99.8. Here's the catch: DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. Finally, institutional activity. While most traders debated whether gold had peaked, Gold Trust has been taking light short-term positions recently, but over the past 3 weeks, the fund has accumulated 39 tons of gold, increasing its total holdings from 975 to 1,014 tons. That's not noise, that's institutional footprint. Institutions are aiming at 4,000, even 4,500, hedging against a Ukraine peace deal and a strong dollar rebound. Moves like this belong to the big players, and they redefine gold's landscape. Many traders get trapped here, and that's why it matters for your next trade. Gold technical analysis. First, congratulations to those who followed my plan August 23, 2025, and bought at 33.52 are now sitting on a gain of over 6,500 pips. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now, let's break down the gold chart. Starting with the daily time frame. Yesterday's daily candle was a strong bullish close above the psychological $4,000 level, fast and decisive, confirming that buyers remain firmly in control. Interestingly, this breakout didn't come from a weaker dollar, but rather from fiscal uncertainty caused by the U.S. government shutdown, which pushed investors towards safe haven assets. The next bullish targets are 4,100 and possibly higher if momentum continues. On the H4 chart, gold hit resistance at $46 and pulled back slightly toward 4,000, where we again saw strong buying interest. If price breaks above 40.60, the bullish momentum could extend to 4,100. However, a daily close below 4,000 would signal a deeper correction toward 39.50 and 3,900. Zoom in to the H1 chart. On the lower time frame, the picture becomes clearer. A bullish pin bar formed right at the 4,000 round number, followed by a confirmation candle, indicating that buyers are firmly in control around this level. However, Price then reached the 40-60 resistance zone and rejected with a 600-pip pullback, showing that selling pressure remains strong at this area. Traders may consider intraday sell setups if price retests this resistance zone again. This structure gives traders a clear multi-timeframe view. Bullish bias remains dominant, but risk management is crucial. All of this brings us to the key takeaway: why consider buying and sell gold now? Gold remains in a strong bullish cycle, supported by institutional demand and technical setups. However, the DXY rebound is a key headwind to watch. Based on this analysis, here's the structured plan we'll be watching closely. Trading plan, October 9th, 2025. Buy zone, 4,000 to 4,013. Institutional support, probability approximately 90%. Stop loss, 3,999. Targets, 4027 to 4037, short, 4047 to 4057, mid, 4077 to 4097, long. Sell zone, 4058 to 4059, intraday. Nearest resistance, approximately 80%. Stop loss, 4061. Targets, 4041, short, 4033, mid, 4023, long. Pro tip: if a false breakout happens, don't panic. Wait for the retest, then re-enter. These retests often deliver the biggest and cleanest profits. Real profits don't wait. Join our Telegram now to get real-time trade alerts before the next big gold move hits. Trade smart. This is not financial advice.